Good morning and welcome to the FP Markets Daily Market Update, coming to you live from our Sydney head office. Right, interesting. We've got a decent bounce, literally one door down the road at the Australian Stock Exchange. Currently trading 1.37 up. There's a few interesting stories there. I think Zipco looking to put together a deal with Microsoft has helped push certain things, certain sectors higher. That's the buy now, pay later company. The miners are up and the banks are up as well. So Australia looking okay. A little bit of optimism that we're coming out of what's been a fairly lengthy lockdown here in Sydney, although Melbourne cases have taken a bit of a dip and that could weigh later on the economy. So keep an eye on that. But as you see, Hang Seng sticking nearly 1% down as well. There's a bit of contradiction in the market today, but I think focusing mainly for a lot of us here on the currencies, it has been a case of buy dollars, wear diamonds. The dollar has had a fantastic run over the last few days. As we said in our last update, there's a lot of central bank action out there today. And the dollar is being favoured for a couple of reasons. It's actually being favoured because there is strong indications that we're going to get tapering of stimulus from the US Fed in November, and we're obviously watching anything a certain Mr. Jerome Powell says over the next few days, and has indeed already said. There's other central bankers chatting out there. Bank of England's Bailey's talking as well, as is the ECB's Lagarde. So opportunity for more volatility in the currencies, but it's pretty much been a one-way show so far. Probably cable's our best example of where we've gone. As you can see, we weren't trading far off 137.50, with three big figures lower at the moment at 134.50. It's bounced off at just above 134. We saw a similar pattern in the Asian session yesterday, where the action sort of died down a bit, a little bit of consolidation, bouncing off the 135 level. It capped out 135.50 and then took another dive down during the London and New York sessions. We've seen that sort of nearly 50-point bounce today. We're back up at the highs of the day in the Asian session at the moment. But certainly the dollar seems to be attracting a lot of attention, and it's something we've been talking about for a few weeks, where the big players and some of the bigger trends do start to come in place in the September trading. The Northern Hemisphere has come out of its summer doldrums, and we're starting to see this volatility. Certainly in the currencies, they've been pretty slack really for most of those summer months, but September we're starting to see it rock and roll. Stock markets as well, as I said, nice little bounce, and a bounce in the US as well. But there's concern out there that maybe we're starting to see those highs. If we do see those indications from the Fed that there will be some, obviously we're going to start off with tapering, and then those expectations of a rate hike out of the US coming a little bit closer, and we're still looking at 2022 for the first rate hike out of this pandemic malaise, I suppose. But everyone will start pricing these in a lot quicker. We're looking at these stock market, and obviously I'm going over to the general indices. Here's the S&P. We topped out sort of mid Q3 2021. We're not far off those highs, it has to be said. We found a little bit of a base at 4,300. We're not too far off of them again in the S&P, but keeping an eye on all things, there are a few people starting to price in a little bit of a retreat in those indices. As we move through certainly the next few months, which tend to see some high trading activity, it does feel like we're starting to get some movement from central banks as well. So I'll just skip through the currencies. I'll highlight really the some of the interest rate yields. That key benchmark 10-year did break above. I'll bring out the chart a little bit. This is the US 10-year yields. It did break above that trend line that had been proving a bit resistant over the last year or so. So it capped out May 21 up where we're looking there. We're at highs at 170.70. We've broken through and all the way down to like 115, obviously in the interim period, but it's been a nice sharp move up, and that's coincided with the dollar moving in the currencies as well. Capped out just above 155 over the last couple of days. We're around about 150, 132, but a lot of guys trading the bigger positions in the currencies will be keeping an eye on that. The local Aussie battler did take a break through that trend line, as you can see here on the hourlies, and indeed maybe more crucially on that daily daily trend line, but we've seen a bump back up to 72 the figure. Once again, we're hearing a little bit of options interest around about 72 the figure for today, but all things remaining equal, and it seems to be a bit of a demand for dollar week, we could see the Aussie have another dip down. Kiwi had a little bit of a sharper move, as you can see here, 69.50 down beneath 69 the figure. Found a little bit of support just above 68.50, but hovering in there. Once again, another break of what's a relatively key support line. Cable probably the favorite for a lot of the tech traders and guys just trading purely off the fundamentals. We're getting decent moves, as I said before. Trading now in around about 134.50. Could see that move again. Once again, I sort of reiterating, it does feel like we are primed for more volatility. I don't think it's going to be a one-way street at the moment, especially with central bankers out there talking. Everyone's looking at their major numbers very, very carefully. That's influencing where we're looking at interest rates. Those interest rate differentials will be the key driver of currencies as we move through the rest of 2021 and indeed into 2022. Euro had a cracking move as well. Probably should have updated that trend line earlier in the week, but look, support was coming in. I think we talked about it last time I presented, around about 116.70. Did get a good break, came down. We got a good 70-point trade in that, down through 116 the figure. We're hovering just above it at the moment as well. Plenty of moves in dollar yen. It was the first one to go, wasn't it? First one to go all the way back here. Fantastic trade through that trend line, and we've capped out again around 112 the figure. We're only 20 points shy of those highs at the moment as well. There could be some more movement. Good for yen traders actually to start seeing these moves coming in. It's been a bit boring, been a bit moribund for the last few months. Some would say last few years, but nice to see some decent moves. I mean, it's only what we're looking at the 22nd. We're only on the 30th at the moment. We're down at 109.20 all the way up to 112. Good to see some volatility coming back to the currencies. CAD's knocking about as well. It's got the dual inputs at the moment, oil and dollar, as it always does. I think we're going to see more volatility there. Oil has come off those highs. I haven't had a really good run over the last week or so as well. Dollar Swiss in line with that euro move, probably not as sharp as the euro move. As you can see, euro Swiss is sort of hanging around 108.30, but keep an eye on that as well. And just skipping over to what I've strangely called my majors tab, just to give you a quick update. Bitcoin hanging in there just around that, and that strangely seems for Bitcoin relatively boring at the moment. Maybe taking a bit of a breather and taking the sidestep. Well, everyone looks to some of the more major products out there. Gold's another one. Interesting to see it's just tailing off, although there are some concerns we could see some safe haven buying in the gold. I'm finding support, as you can see here on the short-term chart, coming in around $1,700 an ounce, and that comes in on that longer-term line as well. I've put in that we based out a few times 2021 around about that $1,700 level. I think if those dollar bulls out there and gold bears, to me, I'd be waiting for a break of that level for those longer term trades. But certainly plenty of opportunity out there, guys. If you need anything from us at FP Markets, please contact us in the usual way. We're on email, all the chats, and just come up to the website. So thank you very much. Have a cracking day. Good luck with your trading, and we'll see you again soon. Thank you very much.